Good morning, good afternoon, good evening, everyone, and welcome to the next FP&A Trends webinar. Today, we are going to talk about a very timely and interesting subject, FP&A Scenario Planning for the New Normal. My name is Larissa Malnichuk. I'm Managing Director of International FP&A Board and FP&A Trends Group. Let me very quickly update you on the FP&A Scenario Planning for the New Normal agenda. So today we are going to talk about scenario planning in the environment of uncertainty. Then we will look at one of the case studies from Lega Group, how to do this quickly and dynamically, and how to do this also in an integrated environment. Then we will look at the role of technology and what is the definition of integrated scenario planning. We will have opportunity for conclusions and recommendations, to hear conclusions and recommendations from our panel. And of course, we will have Q&A session at the end. And now this is a good timing to introduce to you our international panel, definitely international. So we are connecting two continents today, different parts of Europe and America as well. Let me introduce you to our speakers and facilitators. So the first is Mike Cartwright, who is Corporate Finance Director at Walmart. And Mike is going to talk today about how to run scenario planning in the environment of uncertainty. Mike, you're welcome.
Thanks, Larissa. Happy to be with everybody today.
Thank you. And then we have Michael Tweedy, who is Senior Director Global Finance at Lega Group. Today, Michael is going to share with us what is happening in their company at this particular situation and how they prepared for the future for scenario planning. Michael, you're welcome. Welcome to the
Thanks
webinar.
a lot. Thank you, Larissa, and I'm really looking forward to spending the next hour with you.
Thank you so much. And then finally, Anton Niculescu, who is Managing Partner at SPO Global. And Anton is going to share with us a presentation about the role of technology for scenario planning. You're welcome.
Hello, everyone. Great to be here. Thank you very much, Larissa.
So Mike is joining us from America, Michael Tweedy in his head office just outside of Copenhagen. And Anton at the moment is traveling in Romania, but flying to Canada tomorrow. So very international panel. And I'm based just outside of London. Very briefly to update you on FP&A Trends Group. So we have chapters of our international FP&A board now in 27 cities, in 16 countries on 4 continents. Obviously, those meetings, they've always been face-to-face. And with COVID, after our last meeting on the 12th of March in Washington, D.C., we are not traveling anymore. Hope that next week it will be in Copenhagen, face-to-face meeting, the first one. But obviously, the travel is happening through digital webinars. And today we have representatives of 70 countries on 5 continents. So thank you so much for being with us. And the main idea, the main mission of FP&A Trends webinar for us to understand what are the latest trends and developments in modern FP&A. Before we start, I would like to say thank you so much to our sponsor, CCH Tagetik, the company that provides leading CPM FP&A platform, but also consolidation tool, and the company that has over 1,000 customers around the globe. And then very briefly, I would like to update you on housekeeping. So it will be 1-hour webinar. Your participation is welcome. We will have 2 polling questions, and we would like to share those answers with you and with our panel as well. And also we will have interactive Q&A session. It will be subject to timing. But if it's happened that we didn't answer your question, don't worry, we will answer offline. We will send you the reply through email. And of course, it's all about networking, even digital networking. So after this meeting, you're welcome to join our panelists through LinkedIn, but please mention this webinar. And of course, your feedback would be welcome. When we finish the webinar, you will have opportunity to fill the survey. Let me start very briefly from scenario planning. So a lot of different definitions, and generally speaking, those definitions they always were related to strategic planning. But now we are talking about FP&A scenario planning because we have to be really quick with our forecasting, readjusting to the incredible environment. So what it is, it's planning. This is the planning and thinking method that deals with uncertainties in business environment. Exactly what's happening now, and of course, it's given us the alternative futures and their possible effects on the organization. And I really like the uncertainty coined by Paul Schumacher. It's all about, it's explain the situation, why scenario planning is so important right now. And also it explains why our traditional management accounting methods are not exactly suitable anymore. So it's not the time only for one forecast, for one plan. It's all about plausible futures and opportunity to scan the environment for opportunities and risks as well. And predictability span, this is where we could be comfortable with our traditional methods of planning and forecasting. But the reality is that you can see how this predictability span is diminishing, especially after COVID-19 situation. So this is the timing now to look at FP&A scenario planning and how to forecast in the uncertainty. Mike Hartwait, Corporate Finance Director at Walmart, but also a thought leader in the area of strategic finance. Very passionate about this subject, and obviously we had a lot of interesting conversations at FPNA Trends group. Mike presented at some of our events. He wrote very popular articles on this, and now he's here to share this information with you. Mike, you're welcome, and the microphone is yours.
Thank you, Larissa. That's a great introduction. So I hope everyone's doing well. Thank you. It's great to be here with everybody. So let's jump into it if we can. Okay, so I know we're talking about uncertainty today, and everyone has some level of uncertainty, but what does that really mean? So the best way to look at uncertainty is really kind of in a spectrum approach, right? So not everyone has the same kind of uncertainty pains. So if you look at it from a spectrum approach, what you really have is on the left side is, full certainty, right? You have actuals, right? That you know what they are. But as you move further and further out, what happens? Well, you don't just go from certainty to complete uncertainty, right? Things start to feel a bit cloudy, becomes a bit more difficult to see, right? Your outcomes can be a little higher or a little lower than you expected. But generally, that's kind of fog, is how I would classify that. But you get to a point, and I think Larissa showed it with the cone of uncertainty, is you get to a point where probability and distribution becomes really difficult, right? It actually becomes almost like a black hole, right? Things start to feel very dark, very murky. The tools and techniques that you used when you had a little bit of certainty really start to fade away, right? Some people hold on to them too long, and that's a mistake, quite frankly. But you kind of end up in a different world where, again, things are black holes, right? So we're going to kind of work on that metaphor of operating in the dark and kind of black holes here. So let's look at some of the tools that we can use in these environments. So under a kind of somewhat hazy, cloudy environment, things like corridor planning, I think you'll hear about this later in the presentation. So that's sort of dynamic planning with like different ranges, so like a high, mid, low type approach. Again, probability is one of your best friends when you have a little bit of murkiness. And you can use things like Monte Carlo simulation, which can be great for doing like confidence intervals, 95% confidence interval at risk and so forth. And really what's coming down the pipeline is really more machine learning, AI algorithms that can help do that as well. Of course, it relies on having good data and access to data, which as you get into the murky areas, that's where the data becomes much less available. So when you move into that kind of really dark area, you're looking at things like, what can you do? So you look at trying to influence, right? If you can't predict, then try to influence, right? So that's the best thing to do. Be a bit more prescriptive. You have to also think about continuous screening. So always looking for opportunities and threats, looking left and right. We'll talk about that in a second. But we're also going to introduce, and something that's I'm very passionate about, is the life cycle analysis. We're going to spend a lot of time about that. So that's kind of this flashlight in the dark I'm going to present. It's also this sort of path to walk down in uncertainty. And then the last one, which I think actually finance isn't particularly good at, if you ask me, and that's running kind of real experiments. So we're going to talk about scenario analysis, right? You're not really running that experiment, but real experiments where you really actually invest money into things and you see if it fails. And if it fails, hopefully it fails fast. Otherwise, hopefully it takes off. So that portfolio analysis, being more of a finance term, has to incorporate experiments as well. So Larissa, if we can jump to the next slide here. So I think we've painted kind of the definition of certainty. What I want to do now is just spend a couple minutes or a minute or two here on kind of the common mistakes we see with uncertainty. And I want to just point out that good scenario planning, because we are talking about scenario planning today, really starts at the beginning, right? Which is your strategic plan or your target setting exercise. So let's look at the visual on the right. We call this kind of a failure to launch scenario here. So if we look at it, I'll define that as kind of astronomical expectations with incremental outcomes, right? So everything's a hockey stick, right? And the reason why, and I'll cut to the point here at the bottom. The reason why is we spend so much time fighting over next year's resources. And then we try to show what we can do with next year's resources. And that's really a bad approach. We need to take more of a holistic life cycle view in our strategy. So we incorporate how we started, how we kind of matriculated through the life cycle, which I'll talk about in a second. And then ultimately when we need to jump to new ideas. That's going to bust up or avoid this kind of failure to launch strategy. So I'll just hit you with a couple of things to think about. So, you know, I'd ask you to think about, you know, is your current planning process, especially your strategic planning process, is that sort of a fixed duration, right? Is that 3 to 5 years? Again, are you typically showing sort of hockey stick growth from that? Do you always kind of feel like you're in year one of your strategic plan? And most importantly, when you're done with your strategic plan, you know, who really buys into it? You know, does it just kind of get shelved? If you answer yes to any of those, then I think you potentially have this failure to launch scenario here. So I would think about that heavily. Larissa, if we can go to the next slide here. Thank you very much. So now let's bring back in that kind of uncertainty element where we're kind of in the dark, and how do we navigate that? Well, the best way to navigate that is really two ways. You can think about yourself as a child, maybe walking at night in the dark. The two best things you have to know where you're getting to is stay on the path and use the flashlight or the torch, right? You want to be able to go left and right and make sure you're staying on that path. So that's the analogy we're talking about here today. So what does the life cycle do? Well, you can see with the life cycle, we can expand just that typical 3 to 5 year view, looking at the whole life cycle of your strategy. And what that does is it really makes sure that what you're doing is you're investing in the real problem, right? You're investing in the bottlenecks, you're finding the unlocks, and you're solving them. And you can prove that through analysis that you did that, right? That's critical. So you've solved the real problem. As you start to move up the curve, you're looking at things like, are we keeping the competition out? How are we doing against the competition? What kind of different strategies do we have to fight competition as we're gaining market share and growing and creating shareholder value? Are we maximizing when we get to the top of the plateau? Are we maximizing cash flow? That's really where cash is going to be king up there. You need to maximize that as long as possible. So you're really realizing your strategy. And then the reason why we look at the outside of it, or the backside of it, is because we need to know when to shift to new strategies, right? A lot of people say, well, that's just too murky. That's just too far out there. You have to have that view, and you have to be able to figure out how you're going to matriculate through that. And then obviously with that, once you know your path, the yellow brick road, whatever analogy you want to use, it's looking at scenarios. So it's that flashlight. So kind of going back and forth, making sure you're on the path, making sure you're looking for new paths, new curves to create if necessary. So you're constantly screening. It's a full 365-day-a-year process. Unfortunately, I mean, you're constantly looking to make sure that you're optimizing. And then the other one, just to point out there, is cash is king, right? Everything else is what I would call a local efficiency. So if you're really focused on revenue growth or operating margin or market share, just keep in mind that you can build one of those and boost that metric up, that KPI, but it might come at a cost somewhere else down the life cycle, or sorry, down the curve. So it's really about producing the free cash flow, and that's what you need to be focused on there. So let's just go to the last slide here, Larissa, please. Great. And so now really what we want to do here is want to do a call to action. Okay, so we've kind of talked about the methodology. I know we went pretty fast through that, but now it's sort of a call to action for you to think about. So if this is the J curve, if this is the life cycle, how many different strategic business units or strategies or plans do you really have operating? So you don't just have one. If you're a big enough company, chances are you've got a portfolio of different strategies. Where are they on this life cycle? So that's very important. Can you even go back and identify where that strategy started? Can you go back to inception when you were making investment and you were breaking a bottleneck and creating an opportunity for your company to move into, and then hopefully keep out the competition? Are you able to go back and do that? And if you kind of take this life cycle view, how does that really impact your planning going forward? Are you going to expect to get a 10% growth rate if you are in plateau or if you're in decline? Chances are you're not. But then again, if you're in growth stage, 10% might not be that good. So, how does this really shape the different parts of your business? And then, ultimately, what is that portfolio mix that makes sense? So, you can be a company that's largely sitting at plateau, but reality is the market's going to really benefit companies that have a good mix, right? So if you have a good mix of products or strategies that are in more of a growth stage, you're going to get rewarded for that. So it's having that right mix. And what I said before is even doing some experiments, right? So some of your experiments might be the things that are in that initial investment stage. You're actually investing money, not just running scenarios on that. It's critical to have that mix. And then I guess I'll just leave you with this last thought here is, so what does the next 5 years look like if you have this kind of mindset? Will you have that failure to launch scenario or view where you're always predicting, these huge hockey sticks, but in reality, it's just very incremental growth? I think this is a great way to rethink your business and how that path needs to look. And then obviously on top of that, it's about running the scenarios to make sure that you're staying on the path. You're looking for new paths to create. I think you'll find a lot of success in uncertainty. And I'll just leave this with last thought is this approach, although we all probably understand this and we've seen this before and to some degree, largely FP&A doesn't follow this that much, right? FP&A will go to their traditional approaches. But if you look at something like a VC or a startup, these companies get this. And this is what they're using to pitch for funding and so forth. And so I think as FP&A, we need to kind of get back to this and think about that whole life cycle approach. So Larissa, I'll pause it there and I'll open it up for questions on the panel.
Thank you so much, Mike. Thank you for this very valuable thought leadership presentation. Definitely, this is the timing to look at the whole life cycle and to have the strategic view into the scenario planning. I would like to ask Michael Hartwait to give 30 seconds commentaries on this. Please, Michael. Michael Tweedy, sorry, Michael Tweedy, you're welcome.
Cool. So what I love about what Mike was talking about is often when people are talking about planning and particularly financial planning, they get fixed on quite short windows of time. So they forget about exactly what life cycle stage you're in. So I think it's what Mike's talking about is a good reminder to us when you're actually working with this in real life. Is don't forget where you are. Are you in that growth, plateau, or decline stage? Because people get lost sometimes without thinking about it through this lens.
Thank you so much for this reminder, Michael. Anton, what would be your key takeaways from this session?
I enjoyed it very much. My point, and I think it's obvious to us, it's obvious to the audience as well, it's not about business as usual anymore. And Michael has underscored that on every slide. This is not about showing up. It's about doing things differently. It's about taking into account the unpredictable. And for that, you have to change, first of all, the way you think, and then align it so you can do very well by your shareholders, by your employees, by society as a whole.
Thank you, Anton. Thank you for this commentary. Now this is the timing to hear from you. There are hundreds of you online, and the way how we're going to do this is through the polling question. I would like to open this polling question for you right now, and if you can start voting. So I'm launching it right now, and it's all about your scenario planning process. Can you choose one statement that can describe the situation which is happening right now in your organization? Scenarios are run in real time. Scenarios are run in less than 1 day. We can run scenarios, but it's very time consuming, or we are unable to run scenarios in FP&A at all. So please, can you continue to vote? I can see that more than 40% of you voted. We continue until it will be around 70%. So please continue to vote. Thank you for this. Just a few seconds and I'm closing the poll, and I'm sharing the results with all of you for your commentaries. So you can see that 9% are really in a very good situation at the moment. They can run scenarios in real time, exactly what is needed for this world. 13% they run scenarios in less than 1 day, which is not bad. But 69%, the majority of you can run scenarios probably in Excel because it's very time consuming. And there is 9% of you can't run scenario at the moment. Mike, would you like to comment on this?
Yeah, I would. Thanks, Larissa. Yeah, I think this is kind of what we would have expected. So I think if we think about it, right, the kind of the maturity model always says that prescriptive analytics is the toughest to do, right? And that's when we're running scenarios, we're really trying to be prescriptive and change the game. And getting to that data, getting to that analysis is very challenging. So I think that is correct. And now I think it's really just about sort of, figuring out how to optimize that. And so we can stay flexible and run scenarios quickly and have that discussion and debate. And I think there's a lot of, tools and technologies that are kind of shaping that space right now. And I think it's going to, make things more exciting going forward. But definitely a challenge right now. So I agree with it.
Excellent. Absolutely. It's a challenge right now, but something that needs to be addressed. And Michael Tweedy, just before your presentation, I really would like to ask you to comment, very quick commentary, please. So what do you think about this?
Yes, I think I somehow recognize this trend that's being shown here. And I think, if you when people are saying it's time consuming, then you need to probably invest a little bit of time to say, where's the right balance on creating scenarios versus the amount of time spent. And I'll probably touch a little bit on that in my presentation in the next few minutes.
Thank you, Michael. I'm hiding the results, and thank you so much to everyone who voted. Thank you for sharing your experience with us. So let us look at real life case study. Scenario planning, quick, integrated, and multidimensional. And this is the case study from Liga Group. So Michael Tweedy, who is Senior Director, Global Finance at the Lega Group, with a lot of experience, over 25 years of experience, a qualified accountant from Big Four, and a lot of passion around transforming FP&A. Michael, you're welcome.
Thanks a lot, Larissa, and I'm really happy to join you today from the headquarters of the Lego Group here near Copenhagen. And I think for me, one of the funny things about this year is we've all experienced a significant amount of disruption during 2020. And what you can see is when you look at the slide, you see this picture of this little boy looking at the world around him through these Lego bricks. So he can still see what's going on, but things definitely have a different shade to them than usual. And as we've all experienced COVID-19, it probably means different things to some of the people that are on this webinar today. So some of you may be working in businesses that have found it extremely challenging. It's been pushed your business to perhaps on survival mode at an extreme level. On others, maybe if you're lucky enough, your business hasn't been disrupted that significantly. And for others, it's actually created new business opportunities during this time. And I felt that as a finance professional, for all of you that are on here today, no matter which one of those you find yourself in, when you get to moments like this, it is absolutely a time to add value to your business and your business partners and actually leave a legacy, because you can make a really positive impact. So let me tell you on the next slide a little bit about what we've been doing in the Lego Group to help us navigate through these period of uncertainty. And what you can see on the slide is on the left-hand side, I've put out kind of our normal planning process, how we work, and then how we've actually changed that during 2020 to manage through this period of disruption. And what you can see on the left-hand side is in Lego, we tend to work on roughly a 4-year horizon from a planning point of view. So we have very clear ambitions as a business of where we want to be, what our big bets are, and what success looks like. And for most of our employees in the company, they pretty much know what they are, even though they may not know all the details behind them. So that works very well for us, because it actually allows us to make sure that when we work in shorter time scales, so like a 1-year plan, and we want to get commitment from our business, everything ties to our long-term business ambition. So this works extremely well for us. It also makes sure that we put the right resources and focus in our business, and we even measure people from a KPI point of view that we're heading in the right direction. When you then boil that down into even shorter time periods, what we have really tried to do inside the Lego Group is, when we do financial forecasting, is not to create too much complexity. So when you take any 12-month period, we actually only do 3 what we call bottom-up forecasts. So we really do things in a lot of detail. It's actually driver-based, so we know what's driving our cost, where we're putting our big bets and our resources, and we also know the nature of the cost. So for example, about half our cost base in the Lego Group is related to people. So it's very easy and quick for us to be able to forecast exactly where and what the price tag is for that. So for the remaining 9 months in any 12-month cycle, we really do some top-down scenarios, and that's mainly targeted to our upper leadership. And we do this very quickly. I mean, I'm talking about in the morning, we'd normally do some quick scenarios for our executives. So these are quite light, and just reflecting on the poll question in the previous section where people were saying it takes a lot of time. You really need to make sure that you're only doing what's necessary to create those scenarios and call out what assumptions you're working with. So that's how we normally work with it. When I switch over to during this time of uncertainty, very quickly, and it was roughly about March 2020, when we realized now we're going to have to do things differently. So we actually started doing weekly scenarios and financial plans. When things calmed down a little bit, so more towards the middle of this year, we actually decreased that to bi-weekly. And right now, as I'm speaking to you today, we roughly more back to the cycles that we would normally do, so roughly monthly. But during the time when we were doing weekly or bi-weekly forecasts, the thing that really helped us and navigate through the uncertainty was we didn't do one forecast. We actually would show every week what high, medium, and low growth scenarios look like. So this acknowledged the fact that there's uncertainty. Nobody can predict exactly where we're going to land up. And within those scenarios, what we would do is we would call out what assumptions we've made. So it's easy for especially our leadership to know, well, where can things actually land up? And alongside those scenarios, something that really, really had a significant benefit to us is we worked with risks and opportunities. Mike, on the previous session, touched a little bit on this in the life cycle analysis. So when I'm talking about risks and opportunities, what it actually helped the Lego Group do is when we were facing into certain risks, we would take the necessary actions to mitigate those risks as far as we can. And if we actually see new opportunities to boost our business, then we would actually make some choices to actually leverage those opportunities that were available to us pretty quickly. And something that we spent a lot of time on in 2020 that we wouldn't normally have done from a planning point of view is we looked at our credit risk. So for all of you on the webinar today that maybe work in the retail sector, you know very well that the retail landscape has significantly been disrupted. So we had a lot of customers reaching out saying, can we have extended payment terms or different types of payment terms? So we really made sure that we helped our business navigate through that and understand what the cash flow implications of that were. So all in all, it really facilitated a lot of business decisions, and our finance folks were at the table to help those. So just to summarize, and I've only got my last slide left here, is there were probably 3 areas that I would call out, just to reflecting back, that I would recommend, and things that helped us to navigate through this. So the first thing is really, we have very strong systems in the Lego Group for our financial planning, and it's supported by driver-based logic. The second one is working with risks and opportunities. And the third one is actually, we really were able to help the CEO dial up communication during the period of uncertainty. And I'll just touch a little bit on each of those. So the first one is systems. So we do have a system, and it's very flexible. I think the thing that helped us is because we know where we spend our money, we know what drives our cost. So when you hit a period of uncertainty, it's easier for you to navigate through that, because you know how to pull and push on different areas of your business. And we do actually use Excel for some of our top-down scenarios, because we do it very quickly and very simply, but it's probably not the solution for everybody, just to acknowledge that as well. Working with risks and opportunities, yes, some 4 quick examples. So we actually managed to accelerate some of our business growth strategies that ties into our 4-year plan, because we were faced with them and we jumped on them very quickly. We were able to reinvest savings, and I'll give you an example. So all of us have experienced the travel disruption that we see still today going on. So we were able to take out those savings and spend that money on something else. And an example was, we very quickly, after COVID hit us, we gave the possibility to everybody to have work from home equipment. We also, from a product supply point of view, we're able to help our factories that were sometimes temporarily closed know how and where they should supply products as a preference from a profitability point of view. And then finally, also we were able to react and do the right thing from the company point of view to support Black Lives Matter, not only with financial support, but with community engagement. And then the final thing was the communication part. So our CEO was able to do a video update to all 19,000 employees during the COVID period. And that was also partly thanks to navigating and how we supported them. So I'm going to close off there, and now I'm going to open up for questions and comments from my colleagues today.
Michael, thank you for sharing your experience with us. Really interesting to see how quickly Lego Group adapted to the situation. Anton, I would like to ask you to comment on this. So what would be your key points to add to this case study?
I think Lego Group, Walmart as well, are a perfect example of a company who's shifting very fast based on circumstances. And I'd like to echo what Michael said, and that in a way, it goes beyond the company's responsibility to itself, which we fully understand. It's a global responsibility. It's a responsibility to keep your suppliers, to keep your customers, to keep everybody aligned, to keep the global system of trade going, a flow of goods and services, the capital markets flowing. So at the end, it all funnels to us, the people, our ability to still earn a paycheck during these difficult times, to pay our mortgage, to see groceries stores that are stocked up, access to pharmacy, and come back to normal as quickly as possible. And I think companies have to look at all aspects of their global citizenship, if you will, during these difficult times.
Thank you, Anton. Indeed, it's very important responsibility to have. I would like to ask Mike Hartwait to comment on this as well. So what would be your key takeaways?
Thanks, Lisa. I think there's a few takeaways that I thought were particularly important or kind of transcended into the presentation that I gave. I like how Michael talked about the big bets. So having to make those big bets and really see those things out. So that requires that kind of life cycle view to make those bets and to kind of watch that turn around and become profitable over time. I also really like the fact that he was talking about the risks and opportunities and how you have to constantly screen for those. Again, I think that makes perfect sense that you need to be able to kind of run those scenarios to sort of stay on path. And then I think there's one other thing that I really particularly liked was when he was talking about running driver-based logic, not going into too much detail, right? We often use the word calibration. So you just need enough detail to get the right calibration. So being able to, you know, dial the knobs and make it impactful without going down to the lowest potential level possible. So just finding that right level of calibration, which is tough to do. Usually takes time to do it, but I think it's a critical point. So.
Thank you so much, Michael. Thank you for your commentaries. This is a reminder for all of us that adaptability and agility at this situation is very important. And definitely the case study from Lega Group, this is a great reminder how quickly company can adjust and adapt to the situation. Let us check what is happening in your world. We would like to have this second polling questions about the technology that you use, whether you do this in Excel or whether you do this using flexible technology or you don't do this at all. Because technology is a huge enhancer of the adaptability and agility. So I opened this polling question and I would like to ask you to vote. So do you currently use modern collaborative technology, not Excel, for FP&A scenario planning? Only one choice, please. Yes, we do. No, we don't, but we plan to implement this technology in the next 12 months. No, we don't, but we plan to implement in the next 2 to 3 years. No, we don't have technology and no plans for implementation. So please, if you can continue to vote. I can see that more than 65% of you voted right now. A few more seconds, and I'm going to share the results with everyone. So I'm closing the poll, and I'm sharing the results. So you can see the results right now. 25% are really lucky. They have flexible technology and they place scenarios in this technology. 27, no, we don't, but plan to implement in the next 12 months. 20% of you will implement in the next 2-3 years. And this one is surprising. So almost 30% of you don't have technology and no plan to implementation. So probably Excel is working. Yeah. So Anton, how would you like to comment on this?
I'm a bit surprised as well, not shocked, surprised. I think it speaks to the ability to fundamentally understand what the technology will do for you. At the end of the day, being a business person means being pragmatic. And the idea is not just to implement technology for technology's sake, but actually seeing measurable results that translate into action plans. And I think for those who are more towards the last two questions, the planning in the next 2 to 3 years and no plans for implementation, this may be the next step, finding out what technology can do for you and see if it aligns with your business objectives.
Thank you so much for your commentaries. I'm hiding the results because this is the timing now to look at the role of technology and what technology can do for integrated scenario planning. Anton, the microphone is yours, the stage is yours. Anton Niculescu, Managing Partner at Spoke Global. After qualifying with a Big Four organization, after leaving Ernst & Young, Anton played several leading roles at CPM Space and also before Spoke Global. Anton was General Manager North America for CCH Tagetik. A lot of passion, a lot of experience in the role of technology for FP&A, for transformation. You're welcome.
Thank you very much, Larissa. Let's get started. Next slide, please. Thank you again. Great to be here. We have talked about the business approach, discussed ideas to offer examples on dealing with challenges, everything within a compressed time frame, forced on us by circumstances. Now I'd like to discuss the means and aids, the tools, if you will, namely the software that can help us get there. This is a generic discussion. We're not going to discuss a specific piece of software, but more general characteristics of what it should do, and more importantly, how you should select it. I would start by trying to impress on everyone the need to change the perception of our technology, especially in light of the poll we've just seen. Changing it from an aggregation and visualization interface to a tool that can push us towards decisional focus, a tool that can deal with the data heavy lifting inherent to scenario planning. In times of uncertainty, the distinction between what is probable and what is possible gets blurred. We've seen that with the previous two presentations, and we need to adjust for that. It is no longer about predicting the most likely outcome, because getting it wrong is unaffordable. It is about having the right scenario on hand to meet any possible event that you may face. The nature of business over the next, I don't know, maybe 12, maybe 24 months will force you. It will force you more than usual into a reactive mode, because we haven't seen anything like this in our lifetime. So minimizing reaction time by having answers at the ready, actionable answers, is paramount. We'll start by talking about the data-driven model, the idea of finding the appropriate scenario within the context of what is happening as it happens. And the way to do that is through real-time parameterization. It's the idea of taking your plan and driving it towards action, planning and action united. The right software will allow you to engage in a driver-based real-time modeling through semi-global and global variables, meaning that you can use the latest information that affects your business, the latest flow of info, to develop an instant action plan. Top-down, bottom-up, reiterative planning, multidimensional, multifunctional context helps you. It helps you because it helps you to ensure strategic thought from the top and implementation effort from the bottom. It will ensure alignment with all departments, so you do not sacrifice robustness and efficiency for speed. Cash flow. A lot of companies are facing cash flow issues. Having software means that you can not only derive cash flow from your plan, but you can actually use your cash flow envelope as a constraining factor towards your planning. In addition, today's software has evolved. It has artificial intelligence, it has machine learning abilities, and this helps you not by giving you the straight, unassailable answer, but automatically giving you a starting line from the get-go, from time zero, that's based on history, seasonality, in reality, any predictive correlations particular to your business. Next slide, please. The right software will help in reducing the overlap where technology ends and human intelligence takes over. In other words, allow the software to do what it's good at and allow us to do what we're good at. The right software will free us from the burden of data gathering and data integrity, allowing us to use the very short time these days to analyze and drive strategy. Any time that you use in making sure that data from your system is correct and it adds, it's really wasted time that you could be using, analyzing, and strategizing. I'll give you 3 specific cases. The first one addresses reduction in reaction time. And I'll use here a company I've had the pleasure of dealing with in the past, Southwest Airlines. Many of you might have heard of it. It's a quite large company, very, very successful, low-cost carrier based in the United States. They engage in continuous forecasting, the daily activity of keeping their forecast aligned with the latest actual information available. And that's what allowed them back in 2006 and 2007 during the oil crisis to hedge their fuel costs at $55 per barrel instead of the industry norm where everybody else was paying 80. Imagine daily forecasting. Imagine the benefits. Question is, can your technology support it? Let's talk about scenario planning. Prudential, an insurance company, global, engages in actuarial tables-driven scenario planning. It's based on multiple elements of risk-reward given competing maximization KPIs. This approach entails data analysis on a whole different scale of granularity. Imagine doing that kind of number crunching power in a meaningful and timely way so you can act on it. Can your technology support it? Shifting and realignment because of uncertainty. Morgan Stanley back in 2008 faced a severe financial crisis together with the whole banking sector in the United States. They faced, from a stability perspective, the need to switch from investment banking only to investment and commercial banking so it can stabilize its positions. And their planning software did not skip a beat and aligned itself in record time. Imagine the ability to turn on a dime like that. And can you do it based on your current technology? Next slide, please. So what is the right software? In general terms, how do you delineate between the better than Excel group of software and the true enterprise level software available? Something is better than nothing, but there's always best of breed. Here are my thoughts. From a functional perspective, you have to look at the software's core and extended functionality. Everything should be there, but in addition, it should be accessible to you in an intuitive way. So it does complex things. It allows complexity to happen through a simple interface. If the interface is complex, the functionality might as well not be there. If you have to chase it around the tool, you're simply not going to bother with it. The better software vendors out there have managed to pack incredible modeling power while declaring a war on clicks. The dawn of financial software ergonomics is here. And it's what allows the finance department to fully own these tools with minimum involvement from IT. Software should be flexible. I'll keep this short. A business should never compromise its business requirements to make up for software shortcomings. It's that simple. If you have to compromise, that means that you're putting the software first and your business second. And that's a very sad way to spend your money and your time. Unified. Having a cutting-edge best-of-breed solution does not have to mean gobbling together a platform on your own. The days of shopping for the best in every single aspect of what a software should do and then making it talk to each other with all the inherent problems of maintenance and data transfers are gone. There is immense value in a centralized, unified solution that can handle all your processes. Imagine you're planning and you're staying within one screen and you have access to all your data from there, including your transaction level data. Can you do that right now? Let's move to our next slide, please. So what do we do? What are the next steps? I mean, you've heard two presentations. We're nearing the end of the third one. And the question is, okay, this will end, and what do I do? Here's my advice, and I'm going to inverse a bit the order of the bullets presented on the slide. I'm going to start with analyze, plan, implement, which is the second bullet. It all starts with a plan. If you allow yourself a 3 to 4 month window to bring in new planning software, and you should, at least half of that time should be allocated to just mapping out your requirements. The right software will do what you want it to do, but you must plan. Having said that, there is such thing as too much planning, and you shouldn't allow yourself to fall into the planning perfection trap. Perfection is the enemy of getting started. Do not wait for the stars to align before getting started. They never will. There never is a perfect time. The best time to actually have started the implementation was probably a week, a month, or a year ago. But the next best time is right now. Start the implementation process, plan on incremental releases every 3 to 4 months, take the lessons learned in that period and move it forward. The right software will allow you to engage in this multi-phase, agile, incremental build by ensuring the design architecture, testing protocols, overall build effort is truly incremental and not reiterative. So every single cost structure is additive. My time is up. Thank you very much for attending. I'm open for comments and open for your questions. Thank you very much.
Anton, thank you so much for sharing your experience with us. Definitely technology, this is such an important enhancer of flexible and dynamic scenario planning. Mike, what do you think? Can you give your 30 seconds key takeaways to this session?
Yeah, absolutely. Yeah, I think it was a great presentation, Anton. I think the word that I was waiting to hear and I heard it at the end was agile. So I think that's what you really want in kind of a technology solution. It's something that's very agile, right? So as we were talking about earlier, you need to, and that word gets used kind of all over the place, but you know, what you're going to do the first time around is not always going to be perfectly right? You need to learn from what you do and change and iterate and evolve. And that goes for just your regular straight up baseline plan all the way to your scenarios. Again, finding that right calibration takes time, takes trial and error. And so, you know, you need a solution in place that's going to bring that efficiency and that speed to you that you just won't get if you build a massive spreadsheet model and then try to augment it once it's live. That's going to be very difficult to do. You're not going to have that kind of agile change. So I thought that's what I was thinking about during that presentation, is to stay agile and the benefits of agile in kind of new next generation technology.
Thank you, Mike and Michael Tweedy. What would be your key takeaways from this session?
Thanks, Larissa. And yes, for me, there's two things that jump out at me. For me, the first thing is you definitely need, if you don't have a systemized way of doing financial planning today, you need that, because this is a huge enabler. And I've seen this for myself during times of uncertainty. And the second thing is, when you're working with periods of uncertainty, it absolutely pays off to do scenarios. So when I was talking about high, medium, and low, and working with risks and opportunities, it was something we could not have survived without. So I would highly recommend people use that ability.
Michael, thank you so much, and Anton, thank you so much for your presentation. This is a good timing now for your questions. I would like to remind you that you can type your questions through the text box. Please do so, even if we don't have enough time to answer all of them, and we can see that there are a lot of questions right now. We will be able to do this in offline regime. We will send those answers to you by email. Okay, so the timing for Q&A session. Mike Hartwait, the first question is to you. For scenario planning, how are board members' views incorporated into the discussions? What would be your quick recommendations on this?
Can you repeat the question? You said both members?
For scenario planning, how are your board members' views incorporated into the discussion? Obviously, for FP&A people.
Yeah.
You see?
Yeah.
Because traditionally it wasn't. Yeah.
Yeah, absolutely. And I think it's all about building consensus. So, I know we're talking about board members, but just in general, right? And I think this is one of the nice things that Michael Tweedy pointed out, is you need to make sure that your scenarios are simple enough so that people understand what the real drivers are underneath those. So it's keeping it simple enough to kind of figure out what are the key drivers that are really, we're really sensitizing on, making that really simple, and then finding a way to really allow people to run their own scenarios in their own sandboxes, but then bring those together in kind of like a merge process. So yeah, it's how do you create an environment that's going to allow for that, and quite frankly, foster that and actually demand that, right? I think that's what it takes for us to be successful in times of uncertainty. We need to build consensus across larger groups, whether that be the board or senior management or anyone that's doing scenario planning these days.
Mike, thank you so much for your answer. The next question is to Michael Tweedy. Great question from one of the participants. In large multinational businesses, how do you recommend influencing C-suite into move to the process rather than more traditional planning model? So how we can convince our board of directors to move to this flexible and dynamic planning process and scenario planning as well?
That's a very good question. I think if you're looking for support to have either systems and that, for me, it's more about, I think you've got to explain the benefits to them and how big an enabler it is for an organization to help a board navigate, particularly when you have a period of uncertainty. So, for example, we have implemented a few years ago a new system in Lego, and it was actually approved by the board because we had put through, I would say, a compelling case of how it's going to help the company navigate.
Thank you so much, Michael. Thank you for your answer. The next question is to Anton. Obviously, as we always remind you, the principles are vendor agnostic, so we are not in the position to recommend any systems here because they're all different for different purposes. But there are a lot of questions about this, Anton, especially after your presentation. Which tools or methodology do you recommend to work besides Excel, and how it is considered as a trend? once along years we have been seeing many of the systems and technologies were born and died so fastly. So what would be your recommendation on this?
Right. Very interesting question and quite a long one. So I'll try to kind of give you a succinct answer. I'll start with the obvious. I have my preferences. You can read into my title and see what those are. Having said that, there are a number of great softwares out there. I think what's important is that you know what you're buying, and the way you find that out is during the due diligence process. You should focus on three very important things. First of all, focus on functionality. If at the end of the diligence process you reach the conclusion that all the vendors look the same to you, you haven't really went deep enough. The right vendors are not afraid to show you what's under the covers. So go deep into the functionality and into the mature type of functionality. The second, look into breaking the software. It doesn't matter whether it's a realistic scenario, try to find a scenario that will show you the limits of that software in terms of scale, in terms of complexity, because at the end of the day, what's very important, as I've mentioned in my presentation as well, is that you do not handicap your implementation. I will then jump, and obviously the last point is software is implemented by people, so make sure you have a great consulting team on board, one that understands finance and can bring best practices into it, not just bring technology prowess that's expected. As to companies kind of living, growing, and then dying, it really depends on the companies. There's certain companies, again, I'm not going to mention them given the context of our presentation, but there's certain companies who have been around for a while, and chances are any company that has thousands of implementations with medium, large, and very large global companies out there, enterprises out there, chances are that they're doing something right. So look at the analysts, draw yourself a circle onto, let's say, the Gartner quadrant. Select 3 or 4 companies and give them help.
Thank you so much, Anton. Thank you for answering. And now we have time for the last question. And I would suggest that all 3 panelists answer this question from their sides, but very, very quickly. So the question is from one of the participants. We have done 3 scenarios, traditional way, the best case, medium, and the worst case scenario. And then we brainstormed opportunities like flashlights, and as Mike mentioned in his presentation, they also scanned the environment for opportunities and trends and threats. So, but in reality, at the end, we changed gear towards the best case scenario. And also we decided that long range planning is not for us for this uncertain time. Is it the correct way, and how can you improve it? So is it possible for each one of you to give your 30 seconds takeaway because of the timing? So traditional way. What would you say? What would you recommend to this participant? Mike?
Sorry, Larissa, this is Mike. Yeah, yes. Had the mute problem. Yeah, I can jump in on this one just because I feel passionate comments coming out of my mouth. But I really think kind of strategic planning is always there and should always be there. I think I would go back to the beginning of my presentation where that's where the real opportunity is. It's going to be difficult. It's going to feel like a black hole. It's going to be where most companies shy away from. But I think you need to make a stance as to where you think things are going. You have to kind of know what good looks like. Sure, you might not get there. Sure, it might be a bit of a challenge. You've got to shoot for the stars if you're gonna go in any direction that's positive. So I would still, even though the reality is you're not going to hit exactly what you want, I think you still need to have that focus.
Thank you, Mike. Michael, what would be your 20 seconds takeaways?
Yes, so I somehow agree with Mike in part in that when you're going to a very shorter term turbulence, of course, it's very difficult to look beyond the next week or month or quarter. But when you're making big choices, they shouldn't be out of sync with your business strategy for the next few years. Of course, you may do some small tactical things, but it shouldn't mean that you tear everything up and your whole company direction changes. So I would really encourage one to think through that lens.
Thank you so much, Michael. And finally, Anton, your quick takeaways for this question.
I think it's all about variance minimization. So you have your budget, which gives you your strategy. You may have your long-term outlooks as well. But then it's about taking those budgets and pushing the reality of what happens every single day, the further away you are from the time you put together your budget. And you have to take into account the actuals. You have to take into account what's happening in the market now, not back in the September when you did your last budget. Yes, you have a general sense of direction, but the way that you kind of minimize variances to actuals and take advantage of market opportunities and competitive opportunities is by having the ability to incrementally adjust it. So it's not about changing directions. It's about a little bit to the left, a little bit to the right, just to make sure that you don't leave anything unoptimized, if you will.
Thank you so much. Thank you, Anton. Thank you, everyone. Thank you so much to our panelists for your answers. Obviously, we have more questions, but as I already mentioned to you, don't worry. All of them will be answered, and they will be answered through email. Now it's a good timing to say thank you so much to all of you for being here with us. A very international global webinar, a lot of passion, a lot of questions. Thank you for voting. Thank you for staying with us. Thank you for asking questions. I would like to say thank you so much to our international panel, incredible, very strong panel. Thank you so much, everyone. Great collaboration, great performance today. And finally, I would like to say thank you so much to our sponsor, CCH Tagetik. Thank you for supporting us, not only today, but globally, and for our face-to-face meetings as well around the globe. And now, when we close the webinar, there will be an opportunity for you to complete the survey. Please stay, please complete. It's a very short one, but there will be a great opportunity for us to see how we can improve. And please stay connected with us. Looking forward to meet with you at the next webinar, at the next FP&A board. Thank you and all the best.